All right, guys, we got another Sunday scan coming at you. This time, what is it? It's going to be for the 9th of January. This market, I keep on saying there's no shortage lately of trades. There's countless gappers. Every PR gets swiped. Everything's going nuts. But that is not something to feel like you should be outperforming, feel like you're missing out if you're not performing. Some people are good in these markets, some people are not, or even the best traders start to try to figure out, how to nail everything, and they end up missing them all. So it's a good reminder that just keep doing what you do best. Just because you saw somebody crush it on one name or another name, that doesn't matter. That's what they're good at. That's what they did. But in this type of market, when literally there's a dozen names pre-market that have potential that could be big trades, sometimes we try to get them all, and you end up fumbling. So just keep in mind that you should be focused on what you prepare for the night before, things that have edge, and you're not chasing your buddy's gains, right? Just because they crushed it on a particular style does not mean that the next one that you see going crazy is going to repeat the same thing. As soon as you do that, as you guys know, you get that intraday offering. And you knew you shouldn't be there in the first place. You end up in a downside halt and crappy pricing and all that good stuff. So never try to replicate the last trade on the next one, or never try to replicate whatever your buddy did on another trade, and you just feel like you fumbled it, you missed it, etc. This is a game. It's you versus you, and unfortunately, a lot of people start to go this way or that way because of what worked for someone else. So the good news, though, is that there's no shortage of anything at all out there right now. So it's really just up to you as a trader to figure out which ones are going to be the focus names. And the better you are at that, the more focused you're going to be. And don't worry about what's going on with other traders. And I will keep repeating that because, look, 2020 was crazy, but unless you could actually, really zone in on the action, I mean, you could have been left in the dust. There's been a lot of swing trades, a lot of the China names that we've been talking about for weeks. I've been continually been putting on, after we had PDD and JD and Baba and all those ones, I had put EH, IQ, HUYA, and DADA on watch. And then the next ones down, which were, I have some of them on scan tonight again, but DOYU and ZH, or now they're going into the $1.50 type moves, and those are starting to breakout. So as originally kind of expected and prepared, they're going from the big caps to the medium caps to the small caps. And really in China, the small caps are all, 100, 200, 500 million into the billions at this point, because they just have these huge outstanding shares and, minimal float compared to the overall outstanding shares. So you look at the market cap and you're like, man, this thing's already $1 billion. Then the next time you look at it, it's $5 billion. So again, don't force. This was one point that I was having with a trader. We were trading Dada on Friday, and it's unwinding nicely, but it's just that desire to nail the trade, that desire to scale into the trade. Not every trade will be a scale trade, and let it prove that you're right. A lot of times you'll see it fade off, come right back up, right? And so you want to be cautious of getting that bias and forcing that bias to happen. If it's not going down at an accelerated rate, and it's just kind of continually going back to the same support, maybe today's not the day. So don't try to force today to be the day that the trade that you want to happen, is going to happen. Wait for it. Let it prove. And, just like you saw IQ unwound. So, maybe I, start into a partial position, it starts to work, scale in, scale in, scale in, scale in. A lot of people ask me how to trade something like IQ, and it just dumps right out of the gate. A lot of times, if I'm going to take that trade, you have to build in that swipe risk that we talk about, right? So from 930 to usually like 933, even 935 is a very kind of, could go either way. Flushes down, a lot of times you see it swipe right back up and squeeze a bunch of shorts. So the way that you prevent that is just to go in with a size that you're comfortable with in the event that it swipes up. And if it does, no big deal. You were prepared for that. So it shouldn't be affecting you in any negative way. Sure, maybe you're down some on it, but it's not something that's going to put you out, right? Because you started in with a small position with the ability to withstand a swipe. If it does not swipe and it stays heavy because you're there, because you started in with some size, now you have the ability to add again. And if it fails to follow through again, you have the ability to add again. And that's how I scale into the trades that maybe flush off the open I really wanted, but it can't be an A+ size. You can't get into the size that you wanted because it didn't set up and do what it was expected to do. Then last week, another thing to just re-hit upon was the circuit bands. We talked about the circuit halts and the cheap names, the ones that were under 75 cents, and then when they open up towards $1, $1.20, $1.30, I mean, they literally only need to move a few cents, and then all of a sudden they're in another circuit halt. And it makes it almost untradeable. There's no ability for conviction, because if you have a high conviction and it does not do what you expect and it ends up in a circuit halt, you're screwed. Because what if it goes into 1, 2, 3, 4, 5 in a row, and all of a sudden you're $1.20, $1.30, $1.50 higher on size that you were expecting to risk a dime or 20 cents, right? So that's the real issue with having conviction on these ones with the circuit halts, with the circuit bands that are extremely close. So we started out the week good. Last Sunday, I went over, or actually midweek, I went over on the scan why I felt a lot of people, I think it was VYST, or I forget the name of the ticker now. I don't remember it offhand, but it was midweek. And I discussed why I was not expecting it to be as crazy of a trade like the other ones with the closed circuit bands, because I think a lot of people were thinking it would be similar to the rest, but didn't really understand the concept of the circuit bands. So that was a nice little edge there to have to be able to nail that trade. Actually, it was it VVOS? Yeah, it was VVOS. So that was a fantastic trade opportunity that particular day. And no, it wasn't. It was VYNT. VYNT? Yeah, VYNT. Prior close. Yes, that was it. So VYNT closed at 77 cents the day before, whereas VVUS was, I think, like 74 or something like that. So point being is circuit bands were not as wide. They were close on the prior two. And then on the one that was similar price, people were all expecting something to happen out of the open, and it would have just had to go a whole bunch more, and it was unlikely. So that's why I put risk on ahead, kind of anticipating that. Will that always work? No. Last week, though, HKD, we had a crazy move. So great opportunities. I enjoy trading at pre-market in more size, actually, which is usually opposite. I prefer to trade more size pre-market just because once it opens, you never know with the circuit halts. And, just seeing some of those moves, I still have PTSD on seeing some of those circuit bands when they go to the halt, then they open up and they're just like, way high, way high, way high. Nothing that I would want to deal with. But because of that, I'm less interested in sizing intraday. So fortunately, HKD gave us a phenomenal trade Friday. Thursday was okay. It was good in the morning, but then it got stuck in the channel. One thing about the channels, we've spent probably 3 or 4 weeks in a row talking about the channels and how to identify them and what you should be doing when you see that. And whatever bias you had, whatever, if you're sized up and you're anticipating something and it starts to go into a channel where it just, kind of almost goes out to break out, almost breaks down, almost breaks out. Each time it does that, whatever time it does go, it's going to be random. It's going to rip faster than you can get out of your position. So it's important that you identify that channel and size down accordingly until it picks which way it wants to go. Otherwise, you're just sized up, and you're like, hey, you know what? Whatever the market picks, I'm good with. That's fine as long as it works. But if it doesn't, that's on you. That's your own risk management. That's, there's no edge there. It was 50-50. You know that, but you only care if it doesn't work. And, when it doesn't work, it hurts. Other than that, thin names, MMV and MLEC last week. That first move, there's like that first exhaustion move. Always have to be proactive, comes right back down. If they start to kind of consolidate and go sideways, stop thinking you're going to make another $7 or $8 again right after, because a lot of times you'll see them go right back up in circuit before they come back in. And you saw that on MLEC. Once things start to slow, go sideways, just like MMV, I like to cover. I don't, yeah, sure, maybe I would have liked to have a round trip. But is it worth having that increased risk on a Friday in the event that it swipes and then it goes to 11, 13, 15, 17, and you just ruined your week, your day, whatever? No. For some, maybe you don't care. But for me, as I've said all along, I'm looking to keep my headaches down, stress level down. I don't need to come to market and absolutely crush it every single day. I want to take good trades. I want to take smart trades. I want my trades to have edge. So if I am starting into something, for example, MEGL. Is that right? MEGL? Yes. Yeah. MEGL. Might start in. I like to start in because you never know if, XYZ short, time to squeeze, right? So usually I like to see how it reacts after I put on an initial starter position. Does it start to get all crowded? Does it start to, firm up? Does it look like somebody's trying to squeeze it out? Do they squeeze it out? And if that's the case, then that's my edge. Once that exhausts out. And that's exactly what happened on MEGL. I started in real small, and it specifically stated that, just getting my feet wet here. I want to get a feel in case it starts to peak out here at, the 290s, 3 levels. And it ended up, kind of trapping at the 3 level and blew everybody out, 335, 340. I let them blow everybody out, bid after bid after bid, get hit. And then it started to come in, stuffed, and I got involved. And that's exactly what I want to look for, and I don't want to size unless I see that happen. Because if you're sizing, anticipating that to happen, and it doesn't happen, and you go into a circuit, you're not going to be happy. So same thing with GSUN. Same kind of situation. I know you can't see the screen right now, but I'm just refreshing myself, my memory. But GSUN was the same deal. It starts to kind of go. There's a nice exhaustion move, sits back, right? But it gets swiped back up. That should alarm you. Anytime that, you see it slam down and comes right back up, that's like a pause moment. All right, I'm in a starter, right? Do I have too many? And you need to ask yourself those questions. And if the answer is yes, probably too many, I can't go too much further. Again, like last week we talked about, I want to get out because that's the right thing to do. I don't want to get out because I'm forced to. I don't want to force exit out of, panic or fear. I want to get out because, hey, you know what? It did flush. It did start to, fade, but it should have stayed heavier there. It's not. So I'm going to go ahead and downsize or get out and wait to get more information to see if it's a better, setup a little bit later on. Maybe you get right back in 30 seconds after you see that it retests and fails. But if it were to retest and swipe, you'd be upset. You'd be upset because you know that there was no edge there. So I'd rather see it retest and fail and rescale, even if it's lower, because my edge is better and my risk is lower. All right, so there's a couple questions I asked, for some questions this week. Most of them were asking about HKD and what I thought about it. I've already gone over that. You guys got my full thoughts in the room. I also tweeted my thoughts on it. And so they've got the lockup. So basically what I think happened is, if we've got this January 11th lockup, there's a lot of traders that take like a quiet short into lockups, right? That is a strategy. It worked for a very long time. And then a lot of people kind of figured out how to do it, just like anything, right? Once people start to see a trend, they start to, kind of exploit the same thing, and it becomes less and less and less. It used to work all the time. Uber, when they had their huge lockup, I remember it gapped down like $2 or $3, and Phil Godecker had a monster trade. He was short a whole bunch, and it worked out. And honestly, I think that's probably the last time that I've seen something like that work. And this is maybe a couple years ago. But it's a popular thing still for a lot of people, where it's like a nice little quiet unwind. So that's fine. But what happens if they target that name because they know everybody's shorting into that lockup, right? So something like HKD, if you look at the prior days, it's floating down from 12 to 11 to 10 to 9. There's no reason to cover. There's a lockup coming, no brainer. And then, bam, it's at 15, it's at 18. They run it up even more. They trap. Why? They already know that there's a bunch of shorts there anticipating that lockup. So they already have this huge short position that's already bent. Now they just need to trap the next round. And then they have that free exit. Everybody's exhausting into that, because how many people can go from $10 to $60, on size if they're hedged? You don't even need size, really. Even 1,000 shares, you're down $50,000. 1,000 shares is a very small position to swing short on something like that, especially if you have a $30, $50, or $100,000 account. But all of a sudden you're down $50,000, $60,000 on it. It's a different story. So anyway, does the days of the week influence your trading decisions? And if so, how do you manage it? That was one of the questions that I got in. So Mondays, I always want to take seat back, take the foot off the pedal right off the open, because think about all the pent up demand. Everybody's excited. Everybody's ready to roll. Everybody's, let's go. It's Monday. And so everybody, pushes the gas down as fast as they can right off the open. So you want to take one step back. It's no different than the conversation that we had last week, where, the market right now is rewarding chasers. So as a short seller, you need to kind of, all right, this should fade here, but I'm going to take a step back, wait. You think it's a short again? Wait again, because it's rewarding people for holding. So people are not selling. The only sellers are short sellers. And then when it doesn't go down, we get those big moves. So I kind of apply that same focus, same thought on Mondays, just because people get super excited. The other thing too is sometimes on Thursdays, if there's a big move and it kind of consolidates, sometimes I feel like they try to close the weekend strong on particular names. But other than that, no. Rest of the week doesn't really, there aren't particular days that I'm super, super focused on. It just depends on how many names are gapping up. What are we looking at? And just like we talked about last week and the week before, is there 12 names all doing the same thing that, they're probably a vast majority are just going to, implode, and maybe 2 hang out? Or is there only 2 names and they're going to be crowded like crazy? And that's really where you need to kind of think about and focus on. Don't worry, I don't have COVID. I went to get checked yesterday. Lungs are clear. I think I'm just fighting off my son's bacterial pneumonia. Last question before we get into scan. Really had trouble with the front side of IQ. When it finally dumped today, it went straight down out of the open. When do you feel comfortable shorting it out of the open rather than waiting for the exhaustion move? So a lot of times with China names, the stronger the close, the weaker they are in the morning. And then you just don't know, is it going to be a weak open and then it rips, right back? We saw that on XPEV and NEO and JD and I don't know, PDD a million times. So again, like we talked about earlier, you got to build in that swipe risk if you're going to chase it down some. Nothing wrong with that if you're prepared and you've got a kind of an idea of where you want to risk. But yeah, it's always annoying when you're kind of preparing for something and then they gap down. I'm watching Dada, DADA, and EH for that kind of stuff right now. And if they were to gap down, I'm still interested, but obviously I can't take the same size as I would into some gap up, big move, big exchange. That's my A+ setup. That's what I want to see. But if it gaps down, it doesn't mean that it's not a trade anymore, because at the end of the day, it has been going up straight, and that's why I'm focused on it. So think about that when you're trading those. But if you are trading out of the open and you feel like you wanted to still not necessarily chase, but take that trade, watch your size. Go less, and you can always rescale into that trade. All right, winners this week. Vlad, I'm not even going to try it. You've got an IU chat for the month, and Zarlos 9445. You've got a t-shirt for this week. So as always, all you got to do, leave a comment in the comment section, your key takeaway, timestamp. That helps other people to be able to go back and say, yeah, no, I missed that the first time around. That makes a lot of sense. Aha moment. And then as you guys know, we like to try to make little micro content out of it too. So next week, I'll give away scans. Let's get into the week ahead for stocks. All right, guys, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're good with that, you want to understand what makes a trade good with good risk reward, why I'm interested in it, and what kind of moves or what kind of action would make me, more likely to trade it than not, then you're in the right spot. If you're looking for somebody to tell you what to buy or sell, you're in the wrong spot. I'm sure you can find plenty of people to do that, streaming you live. But at the end of the day, this is about you learning how to trade and managing your own risk and actually being able to do this for more than a hobby, turning it into a career. I think that people that just want to be told what to do and when to buy and when to sell, that's great. But, what happens if that person stops trading well? What happens when you want to actually do this on your own? So think about that. There's no easy way to do this, and you need to find out what works for you, your own self, personally, because nobody is the same trader, and you've just got to take a little bit from everybody, just like we talk about. So HKD, lots of tweets and lots of excitement over the weekend. I had a couple replies, told me it was going back to 1500, so just keep that in mind. But realistically, I'd love to see a gap up. A gap up would be perfect, especially if it was over 24 or 25. And the reason for that is because then it would lead MEGL up. It would lead GSUN up, and pretty much all those other ones, ILAG. For those of you guys that have compiled that list of the China names, known liquidation trades and known China walk-ups that we've been talking about for quite some time, that I prepare you guys for in the event that you see the exchange for the unwinds, then you should have that whole list. And you saw last week, they all kind of went up as sympathy. Whether or not they actually ever did go with HKD, more than half of them did not. But what happens is MEGL started to go off of HKD, and then they were like, GSUN started to go. Well, what else ran with GSUN? Then GSUN had these other ones, and then the other ones had these other ones, and it just started to go crazy. And I think 20 China low float prior liquidation trades just started to go crazy. So point is there is a whole bunch ready that when HKD fades, these are all going to be nice quiet faders. So it's up to you to keep those on your watch. The GSUN and MEGL obviously are two of them, but there's a handful of others, 7, 10 or more, that if you just go through the chat logs on Thursday or Friday, you'll see. I posted them every single morning. So ideally 25s, 24, 27 were the key levels. This one, the channels have been working extremely well. 22 was a big support area that we discussed in the room. So 24 to 22, just be cautious getting too aggressive any which way. That's going to be, sort of your swipe risk. But hopefully we have a clean gap up, some sort of exhaustion move, and then starts to fade off. And keep in mind, if everybody is shorting, anticipating the lockup, and it does not go down on lockup day, which a lot of times they don't. It's not like they're just going to sell 16 million shares, limit 7. That's not what's going to happen. I don't think anyway. You never know. But if you're anticipating that and you're sized up thinking that's going to happen and it doesn't, just keep in mind, if it starts going up on lockup day, there's going to be a lot of people on the wrong side. So just have an open, mindset on that, an open bias, because I will long it on January 11th If it's not going down, it looks like it wants to go up. Because I know that everybody will be on the wrong side, and it's not going down, it's going up. It's no different than if there's a FDA approval and it's a sell the news, right? When it's, ran up into, it's run up all the way up into the approval. So it's kind of like a retail run up, and it's already factored in, and then it sells off. Same concept. If it's fading into it and it doesn't go down, where do you think it might go? But I want to be proven right before I take a trade like that. MEGL and GSUN, they don't really need too much conversation, but same deal. Using HKD as sort of that guide, just like you use SPY as a kind of a radar for trading market names. Same concept. MEGL, this is what I was talking about, where it kind of comes up, prior level of resistance, comes back down and stuffs into this level, great, but it comes back down and forms a new base right over here and then launches. So building in that swipe risk, if you're going to start in here, that's fine, but just make sure that you're not going to get taken out if it swipes up. And because of the preparation, because of not fighting it, I was able to add, and have a really nice trade. So hopefully we get the same sort of situation on GSUN. This one was setting up pretty nicely as well. This had a lot of this had that same stuff slam and then soaked up, right? So as we've discussed a million times as well, any stuff move, used to be like, all right, it's over. But nowadays, if a stuff move gets soaked immediately after, your guard should go up. And same deal right here, same move. And then everybody that was too aggressive got squeezed out up into here. And then obviously we went up to the next level from there. So I tried that. I think it was like 180s to 2 on a starter. But I was like, you know what? I'm not gonna bother with it because there's too much going on. And that was the one other point that I had for this week. If you're not right on stuff, there's no point staying wrong. Ever really, but especially this last couple weeks. It's been there's always something coming around. So if you're wasting time trying to make a wrong trade right, you might as well just get out and look for the next one. Data and EH, same deal as always. So we're pretty familiar with these. Those are sort of the daily type setups that you guys know that I look for. It should not be anything that's like, why is this on radar? This is the exact same setup that I always focus on, just like we focused on over here. We had the same thing on IQ straight up, and now we have the same thing on DADA. Not a huge overextended chart, but steady, steady, steady without any major correction. So, if you guys remember, we talked about TAL and also GOTU. Same kind of concept. If you'll notice, they flush out, and then they come back on lower volume, right? So, keep that in mind. As you see data and the other ones come down, they might have some nice longs in them after. Failed follow-through setups. SPRB was a beautiful one on Friday, as well as CTMX. Both of these were the main watches along with HKD, which was on broadcast 8:50 a.m. I always take 12, 15 ideas, condense it to my top either 2 or 3, and in this case, on Friday, CTMX, SPRB, and HKD were the 3 that I chose to focus on. Idea was exhaustion move. You can see the channel that we talk about, and pretty much peeking out, exhaust it out, consolidate, exhaust out, consolidate, exhaust out into that channel. First time that it didn't really breach that 310 level, then unwound. So I got involved from that point forward, and same deal with SPRB. I had posted both those for you guys on Twitter. So in a situation like this, I always like to look at the prior levels of resistance from Friday as maybe a potential morning shove, and then starts to kind of come back in. So you can see those 240s, 250 range, and then obviously CTMX into the 250, 260 range would be ideal. We've seen a lot of T+2 type moves. We've seen a lot of liquidity traps. We've seen a lot of staying power. So just be cautious if you're fading this thing and it starts to come back, right? There's a lot of volume right there now. There's a lot of buyers, And there's a lot of short sellers. And if they don't go down, those short sellers have to cover. So we've been having a lot of secondary moves. So keep that in mind. HOLO, higher the better, low volume. So this one I want to be super, super cautious with. But if it does go 5, 6, 7, something crazy, I think we can get a really nice trade-off on less size, but bigger picture. And so it'll still turn into a pretty nice trade. Otherwise, MLEC and MMV, both fantastic opportunities on Friday. First move's got the edge after the exhaustion, but once it starts to go sideways, like we were talking about earlier, what's your edge? Your edge starts to go down. Same deal with MLEC. How many people ruined their days because, you had a first 14 all the way down to 10, comes back up, holds a higher low, and then we start to go into 22, right? And that is a product of sideways action, consolidation. Your edge starts to go down. Is it going to stuff and slam, or is it going to continue to break out? This case, it broke out. And maybe you ruined a day if you were trying to get too cute with the trade. Same deal, MMV. Hopefully we have another opportunity, but I'd be using pretty much the 12 area as sort of an exhaustion level, and ideally starts to fade back. Switching over to the continuation side of things, nothing I love. EDSA, nice breakout. I'd consider joining the trend if 220s, 250s continues to stay pretty firm. ZH and DOYU should look familiar to most of you. They've just been ideas over the last couple weeks alongside the thesis with, the data, EH, and all those, TAL. You've got the big caps, the medium caps, and then we've got these smaller caps, even though they have huge market caps still. But they're just going and absorbing everything. And last but not least, you have potential rent for a breakout trade. Again, look at the candles. You can see that it had a weak open and then came all the way back. You don't need to chase these things. If you chase these things, you're going to get smacked around. No different than, what was it, SLNO? SLNO, liquidity trap. If you chase the breakout, that might have been the rest of the squeeze. And then you end up getting smacked around. So as always, focus on entries. Let it pull back versus prior support and think about what's a smart entry. I posted a bunch of other China walk-ups on Scan, so you can click through. The link is always in the description. Check that out. But that's it. We'll see you guys in the room tomorrow. If you have any questions, reach out and have a good rest of your weekend.